Hey there, welcome to the channel. So today is Sunday, and I want to take a look at the week ahead. So it is Sunday, June 5th. Okay, so just quickly looking at what kind of economic things are coming up this week. So on Tuesday, we have trade balance. Now, what's interesting here is this trade balance. If you remember back to the negative GDP print for the first quarter, a lot of that was contributed to by the trade balance. We had a large negative trade balance. So that's why this is one that maybe is interesting to keep an eye on, because the question is, so consensus is minus 89 billion. But one of the things is, if for whatever reason we see a much larger negative number here, that might be something to watch, because basically your trade balance, so if you have a negative trade balance, that amount you're subtracting, that from your GDP. So that was the thing that pushed us over to the top in the first quarter GDP to give us that minus 1.5% GDP. I mean, it was a lot of it was the trade balance that we had, the negative trade balance. So that'll be interesting to watch, because if this comes in and the trade balance is not as bad, we'll look at this and try to get an idea whether that kind of implies, whether we're going to get that second quarter of negative GDP, or will we get our, bacon saved by that one. Then we got mortgage applications. So these should be, interesting, just kind of the same thing going on. Wholesale inventories, this is kind of an interesting thing here. Are these inventories building, et cetera, et cetera? Oil inventories. If we're in recession or going through recession, if things are slowing down, then you would expect your inventories to start building. And of course, they've been building because of the response to the cerveza sickness, all the shutdown, all the supply disruptions. So inventories would be built up. But at a certain point, they're going to build up too high, and then they're going to be like, oops, we have too much inventory and we have to start cutting prices. Then on Thursday, we got our initial claims, nat gas. And then probably the big one is Friday. Okay, so Friday, we get CPI. And so we're getting a CPI number at consensus 0.7%, which is times 12. That's a lot of inflation still. But what we think and what we hope is that we're getting to that inflection point. So let's go look at the Nowcast. Looking at the US Cleveland Fed has this Nowcast CPI. And if we take a minute and we just kind of look at this chart, we can see that they kind of track each other pretty well. So basically, the actual CPI when it comes out is in blue, and the actual core is the red line. And then what you have is the Nowcast is basically your yellow and your green. So you can see that they kind of track. I mean, they're not 100% accurate. There's a difference, but they kind of track. And so what we saw in the April numbers is we see that we're coming over, right? We're coming over the mountain here. We started to come back down. But what's interesting right now, the Nowcast is actually predicting, right, the year over year change is actually ticking up. Look at that. It's not a lot, but this yellow bar, it's actually ticking up a little bit. So I don't know what the market's going to do with that. Now, sort of the implication is that we should be around the corner and we should be heading down, but this is going to create a little of a situation here, because it's basically, okay, you're coming down and now we're coming up a little bit. And now we hope we're going to go down for the next month, but are we? That's going to be the question. Or are we starting to tick back up? So there could be some fireworks on Friday. There's something kind of interesting to keep an eye at. You have this Nowcast thing that is, showing that it ticks up. So it's showing here that our previous, so right, so the Cleveland, the Nowcast for the previous month was 8.14, and then now it's they're predicting 8.23. Now the actual was a little bit higher. The actual was 8.3. So we'll kind of see, but they kind of track each other. So it may very well be that we will get a little tick up in inflation. And that may kind of be an issue for all those people that are hoping that inflection is here. And I was pointing this out last time that, hey, we were at this point where we have this inflection, and but maybe that's not going to happen right now. So we'll see. Too early to see, but watch out for that one on Friday. The other thing we look at here too is, man, our oil is, I had some oil earlier, and then I didn't really want to hold on to it, but man, it's really pushing out. So on the USO is your tradable guy, oil fund is pushing to 90. But if we look at the worldwide price on Brent, we can look over here and see that, yeah, this thing's broken out to 120. And so this is actually fairly typical of the crap. If you look at these charts, at some point back here, we had some kind of, it was kind of a symmetrical kind of triangle or a pennant or something like that. It kind of basically broke out, but it really failed. So it broke out, came back down. But what's happening is it's just kind of working its way up the moving average. You see that? So now it broke out, kind of like they had a hard fail here, like 2 days of really heavy down days, shaking people out. And then you get this hard up day. And what's happening now is it's just kind of meandering up the 50-day, the purple line, the 50-day moving average. So that just seems to be what it looks like. So that's not really good for the economy. So if we look at the SPY, we can see that overall indices are, we had some recovery, but if you look at this chart, see what happened is you come back up into resistance in this area, and we feel the resistance. We had some big up days. You had some boom, 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 big up days, but you notice that the volume down in here was lower. So, you got these big up days on kind of low volume, but then you get basically this churn, and this churn has happened. So we'll see what happens if they're able to knock this out and get going further. But there's more resistance all throughout here. This is the problem. You have resistance at 430, you have resistance here, you have resistance here. I mean, there's nothing but resistance on this thing. So it will take a lot of work for this to kind of get back up. And if we looked at the 10-year, so the 10-year, see, the 10-year is rotating back up too. We were getting some relief on it, the last 2 weeks. And then last week, started rolling back up right around to 3% again. So basically sort of the trend appears to be intact. So we shall see on that. One other thing to look at. Yeah, ARC is, once again, it kind of held a little bit. So it kind of held there. And gold has been terrible for this whole thing. Gold has been this dog poo. I mean, the reality is all the inflation fears, we have the inflation, gold hasn't responded. For whatever reason, the money that's seeking an alternative, which used to go to gold, has gone something else. And maybe it's gone to Bitcoin. It very well could have gone to Bitcoin. Now, Bitcoin is trying desperately to hang on to this 30,000. Like, look, it's below, but like, look at the line there. It's trying to hold on. So you see all these little piercings. It's piercing into this line, piercing lower, piercing lower. But in this area, at some point, this will be that hard. If it breaks below there, it's in bad shape. This is very speculative. Notice the purple line. Right. The purple line is the QQQs. That's the NASDAQ. So these are kind of very correlated. So, people are speculating in stocks and they're speculating in cryptos. They're kind of going together. So if we start to see the Qs roll back down, turn over, I would expect it to show up in the Bitcoin. And, I don't view Bitcoin as anything special. I think at this point, it's a classic situation where you have, it's just another speculative asset. And when speculative assets are doing good, everyone's happy, they all go up. I remember back in the late 90s, in the tech bubble. And I remember it was like, you would just buy something and you just wait, you just kind of wait. And eventually, someone will write an article or something and pump that group of stocks. And one of them I was in was like, had superconducting technology, SCON, SCON. And I had this stock and it was funny. It's like, sure enough, it was $5 forever. And sure enough, at some point it got pumped, got went to $30 in a matter of a week or something like that, but then eventually went back down, and it was just, you would just wait your turn. It's like, oh, it's the retailers. It's like the, pets.com, whatever, that stuff gets pumped. Then it's like the telecoms, General Instrument, telecoms, this, that, and then it's this kind of this, and then it's that. This kind of goes around in a big circle. And so I think a lot of the same things are happening now. And so yeah, and things like Coinbase just, gotten beaten up. So that's kind of it for this one. We'll see what happens with the inflation. My guess is it's not really setting up too well. If Nowcast is right and it's going to poke its way back up a little bit, don't know how the market's going to like that. All right, talk to you later. Bye.